Apple just reported their Q2 2019 earnings and the results were pretty amazing. I think that we may actually see Apple stock back to all-time highs very soon. So the question is, am I planning to buy Apple stock right now? Let's first go over the earnings and the numbers that they kind of released here, and then I'll go over my personal stance on Apple stock and if I plan to buy. So here are the numbers. EPS was 246 versus 236 expected. Revenue was 58.02 billion versus 57.37 billion expected. Q2 iPhone revenue was 31.05 billion versus 31.03 billion expected. Q2 service revenue was 11.45 billion versus 11.37 billion expected. And guidance for Q3 came in at 52.5 to 54.5 billion versus 51.94 billion expected. Absolutely perfect earnings report here from Apple when you look at these numbers. And the guidance was absolutely phenomenal. Fears around Apple last year was that their products like the iPhone, iPad, whatever it may be, are dying, people aren't buying them anymore, and Apple's gonna fail as a company. Well, it looks to me that things are looking pretty good now for Apple. They're setting records once again in certain segments like we'll discuss in a few minutes here, and the stock looks to be heading up back to all-time highs very soon. Now, we don't know the exact numbers of iPhones that were sold because remember last earnings report Apple did say that they won't be releasing these specific details anymore. But what I would say is that it's kind of safe to assume that numbers will most likely down quarter over quarter, year over year. But because of the average selling price increase in the last few years, it's kind of made up a little bit for this difference. But the real star of this earnings report is the guidance, which absolutely shattered expectations. And in my opinion, this actually helps the stock market as a whole really because it shows us that demand is still strong out there for consumers. Consumers are still willing to spend money on expensive items like iPhones, iPads, Macs, all these kind of things. And it just kind of puts fears aside that a recession is looming, is very close, at least for the foreseeable future. In their earnings statement, Tim Cook actually stated that they have an install base of over 1.4 billion active devices, and that they set records for services, and that their momentum is strong for other products like their wearables, in other words HomePod and the Apple Watch, which also set new records. And their iPad, which is another one of their strongest products, had its best growth in 6 years. Absolutely incredible considering this isn't even the holiday quarter that we were just in. And things like Apple Pay, Apple Care, and other services have also exploded in growth recently, some of them actually doubling year over year, and Apple actually suspects that this will continue in 2019. On their earnings call, Tim Cook actually stated that Ticketmaster has also just recently agreed to accept Apple Pay as a payment both online and kind of in-store when you buy tickets. So this could be another huge driver for Apple Pay because these are typically larger payments when you pay for tickets for events and sports and all that kind of stuff. And in terms of actual income, all of these products and services generated the company around 11.2 billion in operating cash flow. And they also returned over 27 billion to shareholders through share buybacks and dividends. And to add to this, Apple is actually going to be adding an additional $75 billion for share buybacks and also raising their dividend for the 7th time in less than 7 years. So that means that this upcoming payment will actually be around 77 cents per share, so investors will realize this benefit in the next payment. So all these numbers and figures that we just went through shows that Apple is confident not only in their business, not only in their financials, not only in their outlook, but also in the outlook of the economy, which kind of instills confidence in general for investors. And now looking forward to their guidance for next quarter, which is again an important metric to look at because we did see that they raised their guidance. So let's kind of take a look here to see kind of behind the scenes what exactly is the breakdown that they expect. Revenue, like we said, is expected to be between 52.5 and 54.5 billion. Gross margin is expected to be between 37% and 38%. Operating expenses expected to be between 8.7 billion and 8.8 billion. Other income and expenses around 250 million. And the tax rate of approximately 16.5%. And comparing this to the same guidance we got last year from Apple for their Q3, you can see that almost all metrics are up, which is a positive sign. And the only one that isn't is the tax rate, which is something that's kind of out of Apple's direct control. So from an investor standpoint, Apple has gotten more efficient with their spending and has increased their profits as well, which is a win-win situation for investors. Now everything is looking pretty good so far, but there's still one concern that kind of raised a red flag for me when I was looking at their statements. When we look here, we can see that Europe, China, and Asia revenue was actually down year over year, even though North America and Japan's revenue increased year over year. This could mean that either competition in those regions, especially China, is heating up with companies like Xiaomi and Huawei offering typically cheaper devices with comparable specs. or there could be other factors where consumers in these markets are not spending as much right now. And broken down by product, we can see that iPhone is down significantly year over year, along with Macs, but services, iPads, and wearables picked up the slack here for Apple. But even with all of this, we ended up this quarter down when you compare it year over year to the same quarter last year. And I think this is personally fine because globally, I think people are actually waiting for the next wave to go and purchase these new phones, especially iPhones. And that next wave, in my opinion, is going to be 5G. Even in North America, people are on older phones like the iPhone 6 or 7, and they have no reason to upgrade. And when 5G does come out, then they're finally going to have a reason to, because it's going to be improvements in speed and performance, and carriers are going to be pushing that a lot more. So that's why I think we'll see another super cycle with iPhones and other phones in general. Now, Apple did mention on their conference call that they did see a lot of demand with their trading programs in India and China. So I do suspect that eventually will come to the United States if we see growth stagnate even with 5G phones. So right now I think Apple's just kind of waiting. They know that 5G iPhones is probably going to come out in the next couple of years or so. So when that does happen, they expect demand to pick up. But if it doesn't, then they're most likely going to rely on this trading program to drive up that demand. So now the big question, am I buying Apple stock right now? The answer is absolutely not at these prices. Although I do think that the price of the stock is actually pretty fairly valued. Its PE is pretty reasonable compared to the rest of the stock market. I do still think there's better opportunities out there to make a lot more gain on my money over the next few years or so. Apple is kind of one of those stocks where you just put your money into it. It's a safe company, it's a stable company, it's a blue chip company, it pays dividends, they have tons of cash on hand. You don't really have to worry about that investment over the very long term. But at the same time, it doesn't necessarily mean you're going to be seeing those 20-30% gains year over year, which is what I try to go for to generally outperform the market. The last few months has been pretty exceptional for Apple. The stock has been up significantly. And I did get in at the December low, so I am pretty comfortable with my Apple position. But at this point, I'm not going to be adding more to my shares. But I really want to know if you guys are going to be buying Apple here at these prices. Again, like I said, valuation looks pretty good from a fundamental standpoint. Technicals also look pretty good as well. And I do believe Apple will most likely hit a new all-time high this year if we don't see some broader market recession or correction. Thanks for watching, guys. But if you're interested in watching a video surrounding 5G and my pick for 5G, here's a hint, I do cover Apple in that video. Check out that video here, but either way, don't forget to invest positively. Drop a huge like, hit the subscribe button down below if you're new, and I'll see you in the next one. Peace.